Thank you so much for joining another session of the My Solo 401k Financial daily webinar series. Please chat over questions or topics you wish to discuss so that we can be sure to get to them all. If you end up finding this to be helpful, please like this video as it helps us to get the word out to other solopreneurs, other advisors like yourself who might be looking to secure their retirement savings. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So again, welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: solopreneurs, still time to claim 2025 solo 401k tax deductions. Again, this is your chance to get answers, so please chat over your questions now, whether on today's topic or anything else, so that we can be sure to get to them all. So let's start out by laying the foundation. Eligibility. In order to be eligible for a solo 401k, you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees. So think like an independent contractor, a freelancer, a realtor. So the key is two requirements. You need to report earned self-employment income. So that could be on Schedule C, for example, if your business is taxed as a sole proprietorship, maybe a single member LLC taxed as a disregarded entity. W-2 wages, for example, if your business is taxed as an S Corp or a C Corp. Finally, if your business is taxed as a partnership, you file a Form 1065. Earned self-employment income would be income reported on line 14 of the K-1 that you receive from the partnership. Now, the other piece of the eligibility equation is that you cannot have any non-owner, non-spouse, full-time W-2 employees. So full-time means someone that's 21 years or older, working 1,000 hours a year with 1 year of service, or 500 hours a year for 2 consecutive years. Now, this means that you can have spouses, right? So your spouse could be working in your business as a W-2 employee, and that's not going to stop you from setting up a solo 401k. Your spouse can even participate if your spouse is also reporting their own earned self-employment income, such as their own Schedule C or their own W-2. In addition, you could have another business owner who's working in the business, and that would not stop you from setting up a solo 401k. And that other business owner would be able to participate as long as that other business owner is at least a 3% or more owner and reporting their own earned self-employment income. Some of the top eligibility considerations include: do I need a separate entity? You don't. You don't have to have a formal legal entity. You can operate as a sole proprietor, a 1099 independent contractor, as long as you've got that earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. You'll be eligible to set up a solo 401k. Now, you do need to report earned self-employment income, and we just gave some examples of how you do that. How much you can contribute will depend on that earned self-employment income, but there is no minimum. So even a micro business, a side hustle, would be eligible to set up a solo 401k. You could have a W-2 day job, so it can be a side hustle. You could even be participating in your W-2 employer-sponsored plan and still be able to set up a solo 401k if you've got that separate side self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Now, this time of year, in January 2026, questions arise. I missed the December 31st, 2025 solo 401k deadline. So there's a large number of people in the industry that sign up for a solo 401k on or before December 31st. And if you're in that group, congratulations. That means you've preserved the ability to make all types of contributions for 2025. You can make employee, you can make employer, you can make voluntary after tax, and you'll have the most time to make those contributions because you'll be able to make all types of contributions for 2025 by your business tax return deadline, including any timely filed extension. For those that started late, there's still options though. So that's the good news. So for solopreneurs, there's still time to claim those 2025 solo 401k tax deductions. Because when you make a pre-tax contribution, that's going to reduce your taxable income. So let's assume you had a great year in 2025, but you were busy in December and you didn't sign up for a plan by December 31st. Good news, there's still time to set up a plan and make 2025 contributions. Now, you won't have the most time or the most options necessarily. So it won't be quite as good as if you had set it up by the end of the year, but there are still a lot of good options on the table. Now, what your options are depends. It depends on how your self-employed business is taxed. So let's assume that your self-employed business is taxed as an S corp or a C corp or a partnership. So in that case, if you did not set up a plan, either with my solo 401k financial or even with someone else, then it's too late to be able to make employee contributions for 2025, but you could still make employer contributions. So you could still get some tax deduction, you could still get some benefit. And then on top of that, you could still make voluntary after-tax contributions. So voluntary after-tax contributions will not reduce your taxable income for 2025. They're after tax, as the name implies, but that's part of the mega backdoor Roth solo 401k contribution strategy. So you could still potentially get up to $70,000 into a Roth account for 2025 via that mega backdoor Roth contribution strategy, even if your business is set up as an S corp or a partnership or a C corp. Now let's assume your business is taxed as a sole proprietorship. Could be a single member LLC taxed as a sole proprietorship. So the rules for sole proprietors is that you actually still have time to set up a plan in 2026, a new solo 401k plan, and make all types of contributions for 2025. Now you have to make the employee contribution, the elective deferral, by April 15th. Even if you file a timely extension for your 1040, you would still have to make that employee contribution by April 15th. But if you also file an extension for your 1040, that will at least give you additional time to make the employer contribution as well as the voluntary after-tax contribution. So technically, no December 31st setup is required. Now, if you had set up the plan by December 31st, whether with my solo 401k financial or maybe a basic plan somewhere else, that would have locked in the ability to make all types of contributions, even employee contributions, by October 15th if you file a timely extension for your 2025 1040. So the critical deadlines are the business tax return deadlines. Per IRS publication 560, which is the landmark guidance, those are the critical deadlines. So if the business is taxed as an S corp or a partnership, you file an 1120S or a 1065. Your critical deadlines are March 16th of 2026, or if you file a timely extension, September 15th of 2026. What do you have to do by those deadlines? If you don't have a solo 401k plan now, you can still set up a plan in 2026, and that would give you until those dates to open up an account and make the contributions. Now, you'd be limited again to employer and voluntary after tax, but you could at least make those contributions. So there'd still be some potential tax deduction on the table via the pre-tax employer contribution. Plus, you've still got the full mega backdoor Roth contribution option on this table. And you could open up the account, make those contributions by your tax return deadline, including any timely filed extension. Now, if your business is a C Corp or a sole prop, the critical deadlines are April 15th or October 15th if you file a timely extension, whether for that 1120 if your business is a C Corp, or the 1040 if you file as a sole prop where it flows onto Schedule C, for example, of your 1040. Now, of course, it's going to make sense to sign up early, to give yourself time to open up the accounts, to determine how much you're going to contribute and actually deposit those contributions. Now, we at my solo 401k financial, we still, of course, act very quickly. We'll prepare the documents to establish the plan within the same business day, and then go from there to help you open up accounts at the bank or brokerage of choice. We don't hold any of our customers' money. We don't give you advice. We don't give you investment advice. So we're super portable, right? We focus on the compliance. We focus on the support in terms of, for example, being able to have a plan that comes with all the bells and whistles, right? You can totally maximize the Roth. All the tools are on the table. You can make Roth employee contributions, mega backdoor Roth contributions, employer Roth contributions, Roth conversions, where you convert pre-tax solo 401k funds to a Roth solo 401k status. In addition, our plan was the first plan to authorize and enable the solopreneur to be able to claim tax credits, specifically $1,500 in tax credits, $500 per year for 3 consecutive years, which is going to more than cover our fees for the first 7 years. We charge $650, which includes the $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, we charge our $125 annual fee that covers the second year. So if you add up all of our fees, which are totally flat, right? They don't go up as the value of your account goes up. They don't go up based on the solo 401k compliance support services that are needed. So you know exactly what you're signing up for. And even if you added up our fees over the first 7 years, it's not going to amount to $1,500. So it's going to effectively be free for the first 7 years because those are tax credits, not tax deductions. So it's a dollar for dollar reduction in your tax liability. Form 5500EZ and 1099R support. So once the value of the plan, including the value of any defined benefit plan that might be sponsored by the solopreneur, exceeds $250,000, there is an informational tax filing requirement that applies. The name of that informational tax filing form is Form 5500EZ. So we handle that for no additional charge for our customers. Their advisors just have to let us know once the value exceeds $250,000. Then we'll add them to the queue to take them through that 5500EZ filing process, where we end up preparing the form so it can be filed under the electronic filing system. 1099R support. So this is going to come up definitely for those that are making mega backdoor Roth contributions. It also comes up, for example, for those that are taking distributions or otherwise transferring funds out of the plan. In all of those scenarios, a 1099R needs to be generated. And again, we handle that for no additional charge. Now, we don't have access to the accounts, so customers or their advisors just have to let us know when there's an event that requires a 1099R, but they can let us know quickly and easily. There's a forum on our website that they can use 24/7. Access to alternative investments. So of course, our plan allows for typical brokerage type investments, right? Stocks, bonds, mutual funds, ETFs. But in addition, it also allows for true alternative investments, private placement, private stock, pre-IPO stock, real estate, precious metals, crypto, just to name a few. And then lastly, the ability to access solo 401k participant loans. So with our plan, the solo 401k participant, the solo 401k owner, the solopreneur can borrow from their own solo 401k account, can use those funds for any purpose whatsoever, whether it's a personal purpose or a business purpose. And that withdrawal is not going to be subject to taxes or penalties as long as it's documented as a loan within those loan terms, paid back according to the repayment terms. Now, we handle the loan documentation requirements for no additional charge. Customers just have to submit a form on our website to prompt us to prepare the form, and we'll prepare those loan documents within 1 business day. Now, the terms of the loan provide that the individual can borrow up to 50% of the balance, not to exceed $50,000. It needs to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1% or a CD rate plus 2%, with those payments spread over a 5-year term. So next steps to get started would be to go to mysolo401k.net, click on open account, then click on get started under solo 401k. It's a quick 1-minute application. We're asking for straightforward information like your name, the name of your business, address, etc. We also ask you to name the plan. That's the last question. We recommend 2 words in the word trust for a total of 3 words. It can really be any 2 words, right? It could be your favorite color, your favorite animal, and the word trust, or it could be a derivative of your business name. Typically, clients don't want to use their own name just for privacy purposes. But once we receive the application and payment is made, we prepare the plan documents within the same business day. So an email goes out with a link to our secure portal where you can download the documents that were pre-filled and prepared specifically for your business that create the IRS approved plan. You just simply sign the documents, upload the completed and signed pages, submit a next steps questionnaire. So in that same initial email, you're not only going to be able to access the secure document portal where you can access your documents, you're also going to be able to upload the completed and signed pages. And then the third link where you can tell us via that next steps questionnaire where you want to have the new accounts at. And then once we receive the completed and signed pages and the response to the next steps questionnaire, then we obtain an EIN number from the IRS specifically for the plan and then guide you through the account opening process. So, for example, if you choose Schwab from the drop down menu, we'll prepare the paperwork that Schwab requires to open up the requisite number of accounts at Schwab for your solo 401k. All right, thank you so much for checking it out, the slides. Again, if you have questions or topics, whether on this topic or anything else, please chat it over now. If the information is helping you feel more secure, more confident about your future, please take 1 second to like and subscribe. Liking tells the platform that the content is valuable, which helps others, other solopreneurs, other advisors who might need this information. It helps them find it. Subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. We had a webinar earlier this morning. This is our second one today. We'll be back tomorrow. So if you subscribe, you get notifications of when we go live. You can come and ask questions. You can just hear the content that we want to share. So please don't hesitate to subscribe. What custodians do you work with? Great question from Jeffrey. Thank you so much for bringing it. We are totally neutral. We are totally portable. So we don't hold our customers' money. We don't force our customers to go to a specific custodian. So we welcome all. Now, the top, I would say, are Fidelity, Schwab, in terms of brokerages. Now, for those that are working with advisors, you've also got Fidelity Institutional, Altruist, Schwab Institutional, just to name a few. And then for those that want to invest in alternative investments, we've helped customers open up accounts at hundreds of different banks, different credit unions, in addition to the brokerages that I mentioned. Now, I also mentioned that we're very hands-on in helping the customer open up the accounts at the bank or brokerage of choice. So as I mentioned, for example, with Schwab, we prepare the paperwork that Schwab requires to open up a brokerage account that's opened up for your own solo 401k. So these brokerage firms, for example, they offer basic vanilla solo 401k plans. So if you open up a solo 401k through the basic vanilla brokerage, it's going to be a very limited plan. It's not going to allow for mega backdoor Roth contributions. It's not going to support the $1,500 in tax credits. They don't prepare the 5,500 EZ for you. It's not going to allow for loans, et cetera, et cetera. But what they don't tell you often is that those same brokerages will open up accounts for people that bring their own plan documents. So a 401k plan is a legal entity. It's a retirement trust. So that means, like any legal entity, it's the documents that create it. So customers get the plan documents from my solo 401k financial that allow them to do what they want to do, right? All the different features we discussed, and then use those documents to open up accounts at the bank or brokerage of choice. So for example, with the brokerages that I mentioned, those are free accounts. They don't charge anything to open up the account. There's no maintenance fee. A lot of them come with a free checkbook, like Fidelity and Schwab. Yes, if you have a Rob's question, please don't hesitate to chat it over. But that's a great question. Thank you, Jeffrey. Latonia, I reactivated my account, but I haven't not received my updated paperwork. So let me flag your email. Thank you so much. And then Flynn with the Rob's question. So Rob's is a product that allows someone to use their retirement money for business financing, whether they're starting a new business, buying a business, etc. I'm looking to use $75,000 from my Roth IRA as a down payment for acquiring a business. So you cannot use Roth IRA funds for business financing via a ROBS because the ROBS requires rolling over the funds from the existing retirement account to a new 401k. And under the Roth IRA rules, you cannot transfer funds from a Roth IRA to any type of 401k, including a ROBS 401k. No, there's no such new law that you described. It's called a rollover IRA. Okay, if it's pre-tax money in an IRA, then yes, you could roll it over to a Robs. Now you'd have to satisfy all the other Robs requirements. For example, you have to operate the business as a C corporation. The individual needs to work in the business as a bona fide employee. The ownership of the C corporation is going to be based on the cash invested in terms of the non-retirement cash plus the cash from the 401k. Now, the C corporation could use the money that's invested via the Robs along with the personal money to acquire a business from an unrelated person, and it could acquire that business with seller financing. In our experience, the individual who wants to use money for business financing, excuse me, the individual that wants to use the money for business financing to buy a business will want to buy a business via an asset purchase, but they could still buy a business via an asset purchase and seller financing. So that's totally compatible. I'm not sure what law you're referring to, but there is no such law. There could be some bank rules that your bank might, if you're working with a bank, that might be you might be thinking of. I'm not sure. Any next one from Omar. Any issues with using E-Trade Solo 401k as the underlying with Solo 401k and on top for docs? No, we're definitely compatible with E-Trade. E-Trade will open up accounts. We've had plenty of clients that open up accounts with our documents at E-Trade. Now, in comparison to some of the other brokerages like Fidelity and Schwab, a lot of clients or a higher percentage of clients report that the process at E-Trade is cumbersome to open up the accounts. But we would be fine with that. Our plan documents are totally compatible with E-Trade. Thank you, Omar. Yes, exactly. It's been more problematic. You'll have to take a look at that, do a little searching. Maybe I'm not understanding what is being referenced. Keep in mind that the Rob's investment is not quote unquote paid back because the Rob's investment is not a loan, it's a stock investment, it's an equity investment. So stock is issued to the 401k. So there's no payback requirement. Payback is the language of a loan, not an equity investment. Okay. Okay, so we'll give it another moment to see if any more questions come across. I'm going to flag that email that I mentioned earlier in the meantime. But yeah, great questions. Really appreciate all the engagement. Please continue to engage. As I mentioned, we go live every day. Please like the video. Please subscribe. All right. Well, looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.